How short of sterling is the market?
Extremely short. You've shown the CFTC data earlier, but this is very much confirmed by our own internal flow data. We see this from a variety of different segments of the investor community, but it's also the case when I go speak to clients. It's very clear that everyone is short sterling.
So harder to get shorter?
It would be hard to get a lot shorter than where we are here. And I also just come back to the point that from a value perspective, it's hard to go a lot lower than here. We are coming off of near 50-year lows in value. So to be that short when you're this cheap seems like a mistake to me.
Marvin, what do you think about the vote yesterday for another Scottish referendum? How does that affect the currency trade?
Well, Matt, that's clearly something that's created a lot more noise around this issue, as Mark was talking about earlier. But ultimately, I think it's a lot of sound and fury signifying nothing. This is a gambit, clearly, by the First Minister of Scotland to position herself for an election in the future. If you look at polls, there's no clear indication that Scots want another referendum before they actually find out what a deal looks like, and it's certainly not even clear whether they'd vote to leave. So I think this is really a political ploy on her side, and I think markets have largely seen through that.
Do you expect the BOE to react at all to the pound where it is, or to any moves after Article 50 is triggered?
I think they're always monitoring these things. Clearly, that's been a key driver of inflation. So far, inflation has been coming largely from external sources. What they've been focused on is, do you start to see domestic sources of inflation? If you start to see that, that's more the type of thing that they're going to react to. If not, I think they'll look through any inflationary impulse coming from sterling if it were to weaken further. But also, of course, I think that they would welcome, with respect to their inflation mandate, a reduction in imported inflation if sterling appreciated.
Marvin, let's talk about the scale of the undervaluation a little bit. I'm curious to know where you, and we've got some of your targets that we can put up on the screen. I'm just wondering how this fits around the metrics. So you can do PPP on your Bloomberg. Yeah. You can do it from an OECD point of view, which has sterling undervalued against the dollar by around 16%. It's interesting to see what the euro is to some of the points being made in the US. But the Big Mac has it trading lower as well. From a producer and a consumer point of view, I think we've got 27%, 29% undervaluation from a producer point of view. Consumer a little less, 9%. Give us your sense of the degree of undervaluation here and kind of what you think the fair value is and where that fits with your targets.
So we roughly see it as being about 15% undervalued on a long-term historical basis. The way we look at it is very similar, but on a multilateral PPP basis. So looking at the real effective exchange rate relative to its history, and we have data going back to the early 1960s. There's only been 2 times that sterling ever got weaker than this post-Brexit period. That was when the IMF was bailing out the UK in the middle of the 1970s, and for a few months in the global financial crisis. We don't really think that discount is merited based on what's likely to come out of Brexit. And so, yeah, we see it as about 15% undervalued on a broad basis. What does that mean in terms of particular currencies? We do think that Brexit is a negative hit. We're not expecting things to go back to normal. We're just thinking that this is extreme. And so we're looking for euro sterling to go back to 76 by the early part of next year, which is a little bit on the weaker side than historical, but still significantly stronger than here, and for cable to go to around 138.